All right, guys. So, excellent. So hi, Dave. So the webinar says, the title of this webinar says the 3 biggest mistakes that most traders make. Well, I'm making a small amendment to that. We started talking about this at FX Bootcamp yesterday and trying to come up with, okay, so I know I was going to make it the 3 top mistakes that most traders make, but when I was giving this some thought, there's a lot more than 3 mistakes that people make. So I'm going to burn up our 45 minutes here. Okay? And we've come up with, I say we, because we were talking about this at FX Bootcamp, but basically it was very easy to come up with, morning Jamie, very easy to come up with about 30 of these things, and about 30 of them in about 5 minutes of thinking, frankly. And I've made about all 30 about 4 times in terms of mistakes. All right. So some of these are gonna be novice mistakes. Others of them are gonna be mistakes that you're just gonna make all the time. And the reason why I'm doing this webinar is, 1, I had to think of something to say. 2 is I thought this would just be an interesting discussion to highlight a few of these things and maybe it rings a bell and resonates with you personally. All right? If you have any questions, fire away as we go. Okay, so first one, and these are no particular order of frequency or as to how which one of these is committed more than the rest. But okay, so obviously, well, yeah. Okay, so the first one is chasing price. I think that this one's pretty self-explanatory, and honestly, this was the very first suggestion that came up, and I just kind of jotted them down as they came up. But chasing price, pretty novice mistake, and I think it's one of those things that you get by after you've lost enough money. If you've chased price once, you've chased it 3 times, and if you've lost money doing it all 3 times, very quickly you learn that touch hot stove, get burnt. Okay, so it's not difficult to make that correlation. All right. Okay, not have a trade plan at all. All right, and you wouldn't believe how many people step into the market and have no plan, no strategy. Sounds should be fine. All right, so what about mixing and matching lot sizes? Who's guilty of this? Absolutely, Mike. All right, who's guilty of this one? Okay, of number 3 here. Okay, so here's what I mean. All right, tell me if this sounds familiar. All right, so you start your trading day. And you might trade. Okay, let's say that your starting lot size is 100K. Okay, and you start your trading day and you lose 15 pips. Okay, and in monetary terms, that's $150. Right? Second trade, you use the same lot size and you lose 10 pips. Okay, so in dollar terms, you lose $100. All right, so you're down $250. Okay, you're not feeling too good about yourself right now. All right, it's not a lot of money, but you're not feeling great about yourself. Okay, and you start to think, wow, I'm 1 trade away from a minus 40 start to my day. Are you not? I'm just using this as a raw example. Okay, so what do? You think, to build a little bit of confidence, I think I'm going to lower my lot size on this one. And what do? Next trade, you go 50K. So Murphy and the law of averages, what happens? Oh, cool. 30 pip trade. Excellent. Well done. You make 30 pips. In monetary terms, you make $150. Right? So, and that concludes your trading day. So you're actually feeling pretty good about this day. You think, I've done all right. I'm up a few pips. Haven't lost anything. Yeah, not in pips. Okay, but in monetary terms, you negative 100 for the day. Pip total plus 5. Anybody familiar with this situation? And as a result, you just slowly bleed to death in your trade account. You just kind of whittle it down and whittle it down and whittle it down and whittle it down. Yes. This is catastrophically bad for you guys. And it's nothing more than a product of psychology. All right? That's something that Mark Douglas said in his book. All right? And this is very true. There's some things I agreed with in there and some things I never. So all right. So what I'm suggesting is trade a consistent lot size, no matter what. And look to add to your winners, not go in heavy and then react from there. Go in light and then add to the winner as it starts to work for you. Ready? Okay, you start off with 100K, you lose 15, that's $150. Next trade, you lose 10, that's $100. Now your confidence is shot, so you halve your lot size, you make 30 pips, which is only $150, so ultimately negative 100 in dollar terms, but plus 5 in pip terms. Because the whole point of this discussion is that the third trade you went in lighter than you did in the first one. Right, lot size changed. And this is what I'm saying is that this for me is one of the larger mistakes that people make, and then I don't even think they're don't even think they really know that they're doing this, right? So one of the truest things about Forex is this, and just trading in general, okay? Let's say that 60% of your trades are successful. And I'm talking, forget break-evens, we're just talking 60% of your trades are successful. All right? Heck, for the benefit of the easy math, let's say 50% of your trades are successful. Okay? So the thing is, though, is that you don't know in what order those trades are going to come up. Okay? So in other words, your string of 10 might look like this. Win, loss, loss, win, 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 loss, 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 win. Okay, it's 50% success rate. Next string comes along. Loss, win, 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 loss, 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 win, win. Once again, it's a 50% success rate. Okay, and your next string of trades comes along. And you go win, win, loss, loss, win, win, loss, loss, win, loss. You starting to pick up what I'm putting down? Is that your average success rate remains the same. Okay? However, the order in which the success happens varies. Does this make sense? So the way your wins appear and what order they appear is that you don't know. So what do you think happens when old Murphy's Law kicks in and you start to do this stuff? Yes, you guessed it. You're going to start to reduce your lot size whenever you hit the winners. And your full lots are going to be on the losses. Why it works out like that, I don't know. It's just one of the Murphy's laws of trading. Right. The only reason why you would manipulate your lot size is because your confidence is shot, and it's a product of taking speculative entries, getting beat up, and then when the real thing comes along, you either don't take it at all, or you take it in a reduced capacity. Guys, this is catastrophically bad for you. Do you know that I really think that there's an ability, and we're getting into a sort of philosophical discussion now, but I really think that there's a technical ability cap that we all experience. Now, if I've missed your question, please just throw it back at me. What I mean by that is you get to a point fairly quickly where you just cannot learn anymore. Where you just cannot become a better technical analyst or better fundamental analyst. There's a ceiling there. So what's the difference between making money and not making money? It's how you manage not only your losers, but it's how you manage your winners. Okay? In terms of adding to winners. Okay? There's a big debate about whether I should scale my profits, hold my profits. A lot of that depends on the type of trade you're attempting, the context of the trend, time of day, all these other different things. Because the real guys that make money in Forex pile on to their winners as they become successful. The guys that are lacking confidence lighten their position at every junction. All right? And what I'm advocating is, yes, your initial lot should be on your risk. Borat? I have sort of an averaging in strategy. Can we save that question? Can we save that question for next time? Just because it would occupy the entire 30 minutes. I mean, basically I do something like this. You know, entry number 1 starts to work for me. I'll go entry number 2. That puts them both in here somewhere. Stop above the whole thing, etc., etc., etc. But I go in with a slightly reduced amount on the second amount because I don't want the whole thing turning negative, etc., etc. And I'll only ever add to a winning trade. I'll never add to a losing trade. You know, on the very odd occasion, there's a scaling in strategy, but seldom. Okay, so let's move on. All right, the next very big one is boredom trading. All right, so I did a little bit of private mentoring from time to time. Okay, and this is one of the things that I see a lot. Okay, and 4 and 6 are pretty similar. So I'll see people do this sort of thing. Okay, and I'm guilty of this too. All right, beautiful trade plan. I'm like, oh well, Euro I think is short today to 103.40, and then I think it's going to get long, etc. Right? So their whole trade plan for the day is sell Euro to 130.40, and then look to buy it. Okay, excellent, beautiful. Okay, 130.40. You know, I think there's a couple of ways, and it's one of these things where and you know, it's one of these things where one almost wants to say, look, what is the advice for chasing price? If you had a chasing price problem, what would I tell you? Don't do it. Right? It's like if you were picking your nose as a kid, your parents would be like, stop that. Well, unfortunately, there's some things in trading where you just got to not do it. It makes sense? So as far as as far as boredom trading, how does one conquer that? Don't do it. All right. I know it's pretty lame, but I think you're picking up what I'm putting down. Okay. So, all right. So this is what I see a lot. Okay. Nice trade plan. All right. Looking to sell down to 103.40 and then buy it. Okay. Now let's say price is at, 31.20. All right. And it starts to look like it wants to go up. Right. And, I'm being facetious, but I think you understand what I'm saying. At the end of the day, they're just some things in Forex that says don't do it. No, you got to stalk. You got to stalk the market, no question about it. But this is what I'm saying. You got to be committed. You got to be committed to what you want to trade. Anyway, so let me finish my point here. So, what do I see? Okay, so in other words, point A might be 131.20. May not necessarily be a good short. Okay, and then point B is 130.40. Okay, and you're looking to take it from point A down to point B, and then maybe look at the buy side. Okay, come in the next day, and what do I notice? Instead of nothing but shorts in here, there's two longs for minus 12 pips. Oh, but it looked like it wanted to head up. Oh, but it was making a higher low. Oh, my favorite one is this. Well, I was gonna sell it here at 31.20. It was sitting at 30.80, so I wanted to make the 40 pips up to that level and then short it. And inevitably what happens is it doesn't quite make it to the pullback area, or it gets close. You're sitting in a long, you take a minus 10, and then it goes down and you miss the real short. Anybody familiar with this? No, David, I have no idea what you're talking about. You're mad. Yes. Yeah, so the bias and the trade plan is beautiful, but what happens is you trade in between that trade plan. And you're doing a couple of things wrong. One, you're diluting the quality of your initial analysis. Okay, your first trade plan is like multiple choice. Your first trade plan is often your best. And then you look at the end of the day and you think, well, how did I lose 33 pips and all my trade plans worked out? Well, you were trading in between your primary bias. Two, that buzz killed your whole day because you dug yourself a hole to try and come out of, right? And then because your confidence was so shot, when your proper trade plans came along, you didn't take them, or you took them at a reduced lot size. You getting what I'm... So, this is a small thing that can really snowball into something very negative. It's all about... I'm a big believer in trader psychology. We all have our little trader psychology that's a very fragile thing, right? When we're doing well, you feel on top of the world. That psychology is so strong in money. But it only takes one or two things to put that in a big time slide. So you don't want to do things that's going to emotionally compromise you. All right, and you can hear the sarcasm in my voice a little bit, but you know what I'm getting at. Okay? So trading between your bias and boredom trading are two major problems. Are there any questions about that? Do you guys know what I'm saying yet? And I'm only pointing out things that you know, but maybe being aware of it is helpful. Okay? All right. The other one that's a major one is trading, number 5 here, trading without a bias. Rocking up for the day and just reacting to the market. Okay, I don't care if your bias is wrong. Pick a team for the day. So if you think something is going to go up, only look for longs at support. If you think something is going to go down, only look for shorts at resistance. It just takes one side of things out of the equation. All right, and obviously have a line in the sand as to where that bias would change. Yeah, so if you sit in it, so I did this to myself last night, just today. I was a bull on the euro at 30.40. Okay, you can go watch my video. And I kept looking at it thinking, well, that looks incredibly bearish. This might actually tank today. And the more I sat there, the more I convinced myself that that could be a potential situation. And I took a 10-minute break, came back, and common sense prevailed. But it'll twist your brain the more you sit there and look at it. Pick a team, trade a bias, and live with it. Yes, Mike, you're absolutely right. Okay? All right, number 7. You are your own best analyst. So I was just listening to Adam earlier on. FX Street's an incredible resource, guys. I mean, I don't think there's some very smart folks on here. But you want to know who your very best analyst is? Yourself. Well, Sanjay, if a short makes sense, then by all means, trade a short. But the short should have to really convince you and break a level of support if you're a bull, and then you start to think, okay, well, maybe this is short. Either way though, yeah, just having a bias settles one down a lot. Okay, guys, you are your own best analyst. I don't care if Jim Rogers is sitting next to you. You're the one that has to put the trades on. You're the one that has to trust it. Do your own analysis. Make your own trade plans. Take suggestions. But by all means, you have to do your own heavy lifting here. All right, and there's a lot of resources out there. Okay, now, number 8, unrealistic goals and expectations. So, all right, take in context a rangy market and a trending market. What is a realistic total pip-wise that you'd like to achieve in a week? Be realistic with me, please. Don't tell me 500 pips. All right, that is a pie-in-the-sky goal. What is a realistic goal? Thank you, Swerve. Realistic goal that you'd like to achieve in a week. Okay, I think that's fair. I think 100 to 150 is fair. Absolutely, it can be done. I'm just talking about average. A nice, easy, realistic total that you can go for. I think, and this is sound, and I have a low total to achieve, a defeatist total to achieve on purpose. I think that 100 pips a week is a nice goal. Anything above that is plus. Why such a modest goal? Okay, 100 pips a week is going to make you plenty of money over a long-term stretch. Lower your stress. That's it. If you have to make 100 pips a week, how many decent run-of-the-mill spot trades do you have to make? Yeah, like 3 or 4. Okay? Yeah, like, we'll call it 4. Okay? So let's say that you are investing, I don't know, 25 hours in the market. That means you're going to put on a trade on average once every 8 hours. Okay, now your 4 trades might come in 10 minutes. Obviously not, Solomon. Okay, I'm just talking about as a functional goal for yourself. A monthly goal is great. I don't feel weekly pressure Friday if I haven't made the pips. It is over a protracted period. I'm just saying on average per week. Okay, so my point here is, and we can debate goals and things as much as you want. I'm just saying, my point here being, is if I'm sitting at the desk thinking, I only have to make 4 quality trades, and admittedly, you're going to lose some. Okay, let's say I'm going to make 6 quality trades. If I don't trade for 2 days because nothing sets up like I like it, should that mean that I go ahead and just start trading a bunch of silly things? No. Because I know Wednesday, Thursday, Friday, I can absolutely make 3 or 4 good trades and get this handled. So if the Monday after non-farm payroll to me is one of the worst trading days of the month, if I don't put on a trade that Monday, is it a big deal? No. Okay? And one of the biggest things that I see that folks do is they want to trade more in crummy markets. So what happens is they go minus 15 and minus 20 to begin their day. They're sitting there minus 35. Now we're starting to get angry. Market really hasn't done anything. It's a crummy market. So now we're going to amp up the trading. We're now going to start trading more. Instead of going, you know what, this market sucks. I'm going to go away and come back when it's better. You know, or, oh wow, we're really moving. This is a great day. I'm gonna get with it. Yes, it takes a chunk of money. This was another point to this. Unrealistic goals. Okay? The other unrealistic goal that I see, or unrealistic level of expectation that I see, can you see those, before I move on, can you see how almost a defeatist goal allows you to filter your trades to only have to trade quality. And if you don't know quality, if it hits you between the eyes, you got to go and do a little more testing. But if you're thinking, man, I've got to make 300 pips, the pressure is crazy. You've set yourself up for failure unless you're a confident, good trader. Yeah, this is, guys, I mean, psychologically, for me, this singularly made me decently profitable right there. By saying, no, I don't have to capture the whole market. I can be basically a horrible trader and still be profitable. Oh, that's awesome. You're telling me I can be just about mediocre? Excellent. That's right up my alley. Okay. Right. The other unrealistic goal is this one. Well, I've got a full-time job working 40 to 50 hours a week, and I can make full-time gig, okay, full-time job, yeah, we'll call it FJ, and I can make 40 hours a week, and I can make $5,000 a month. Okay, I'm making 5 G's a month here on my job. All right? And I can trade working 20 hours a week, making $3,000. Well, surely if I go full time and I can put 40 hours a week into Forex, I can make what I need to live. Let's say you need $5,000 a month to live. It's probably more like 10 these days. Let's say you need $5,000 a month to live. All right? If you're working 20 hours, right? Yeah, thank you, Dave. Okay, so now the expectation is this. Now there's an expectation, or there's a thinking that, well, if I just quit my job and put that all into Forex, I'll make the salary up. Guys, a full-time transition is not worth 40%. In my experience, talking to everybody I've spoken to over the years. Sorry to burst your bubble. It's probably worth 10 to 15%. Do you know what I mean? In other words, going full time is probably only going to better your opportunities in the market 10 to 15%. Now, that doesn't mean that being able to concentrate it on full time is not going to exponentially increase your learning curve or the speed of your learning curve, right? Getting what I'm saying? But as far as devoting yourself full time to it, you're not going to see a 40 pip gain. I mean, a 40% gain in your profits based on devoting more time to the market. Sorry to disappoint on that one. Does that make sense? So if you're considering going full time, you should really be able to make almost what you need to make on a part-time basis to within 10%. Pipster Wayne's fund, they changed the regs, so he's trying to get that figured out. Right, so keep this in mind, guys. Okay. All right, then there's, yeah, I think so, and I'm trying to be conservative with that, Fergie. You know, it might be worth more, and obviously it's going to differ per person. I'm just, I think that there's this sort of underlying thinking that going full time's just exactly what you need. Okay, no stops. All right, well, there's different thinking here. I don't care if you have a catastrophic stop of 300 pips. Please just trade with a stop. All right, no exit plan for profit or loss. I love this one. Hey, let me get in a trade and then try and figure out where I should take profit. If anything, you should work that out first and then your entry. You've got to know where something's going before you can try to get into it. So just getting in a car and going for a Sunday drive. That's fine. By all means, go for a Sunday drive. But even if you're getting in the car for a Sunday drive, generally you have some idea as to where you're going. And if something's fallen 173 pips, maybe it's a good idea to see if it can fall a little bit more before you start shorting. There you go, Solomon. Exactly. I think it's, I think it's Mark Weinstein and David Ells heard this story a lot in Market Wizards. He talks about the cheetah being able to wait in the bush for 3 days to pounce on its prey, and when it finally does decide to pounce on its prey, it singles out the weakest one of the herd. It's almost a completely unfair advantage. That's what you want. You want to be a bully. Okay? Desperation trading, revenge trading, trading hungry. This roots back to sort of this boredom trading. Right? You've dug yourself a little hole, you're in a bit of an emotional meltdown, and now you start to go to work. Okay? The other one, and this is going to sound a little harsh. I get a lot of this sort of thing. David, I've lost my job. I've got 10 grand between myself and my family starvation. I've been trading for 4 months. Can you teach me to trade profitably so that I can make a living for myself and my family, please? Guys, sorry to go to work. Got to look for another gig, bro. Sorry. You cannot, if you're trading money you cannot afford to lose, it's not going to happen. I'm sorry. So I'll leave that one up to you. Yeah. Okay. All right. Making the same mistake more than twice. All right. We've all made these mistakes once, twice, heck, maybe even. Yeah. I mean, it's cool to make a mistake once. It's fine to make it twice, but to make it 3, 4, 5 times, be careful about that. Okay? You know, there's only so many mistakes, and there's lots of them, and I've come up with 29 here, but there's probably about 179, honestly. And there's mistakes that I've made that make up mistakes. Yeah, Solomon, that's not going to work. Yes, Mike. And I think that's very conservative. Yep. And you really need a head start that if you got that kind of account size that you don't need to draw any money for 6 months. You know, because if you're trying to pull out 8 grand a month to live, you know, now you have to make 40% ROI per month just to break even in your life. You set yourself up for heavy failure. Okay, here's a classic one. Yep. Okay, setting stops according to money terms and not technical terms, not technical levels. Okay, so in other words, I think I'm gonna short this Aussie right here at 104.50. Really, realistically, the stop needs to be at about, I don't know, above 105.10. I'm using this as a random example. But instead you say, well, I don't want to lose. I've lost $274 today already. I don't want to lose any more money than I have to. So I'm just going to put my stop at 60 and hope it works. You've made a non-trading decision. You've made an emotional decision. You don't even know you're doing it. You're just doing it. Or this one. I'm up 8 pips. I'm going to move my stop to break even. I'm tired of losing money. I'm going to move my stop to break even. Comes up, knocks you out, works. I lost an entire trade account doing that. Here you go. All right, I think I'll take a short, right? Take a short. Put a stop like, oh, I don't want to lose money. No confidence whatsoever. I don't want to lose money. I'll put my stop right there. 15 pips away. Because I'm only willing to lose 150 bucks on this. What does it do? Fully knowing that this whole area here is resistance. Have to put my stop above the resistance, but no, I want to get in this thing and I'm not willing to lose more money. Goes up, knocks you out, works. Being right and perpetually losing money. Anybody familiar with that full action? You're just looking back day after day and you're like, I'm actually a pretty good analyst, but I'm the worst trader in history. It's on a trade by trade basis, but I would say on average, I don't know, on average 20 pips. It really just depends on the setup. Okay. The other thing is just the flexibility. It's one thing if you're saying, well, my first resistance is here, my next resistance is here, that's 30 pips away. If it comes up there and you get a little higher low, I'll just get out of that for -10, let it go up higher, get in it again. And then that way, at least when it comes down, you're not sitting at your break-even point exactly where it would fail. You're sitting in the second entry at break-even, hoping it makes a lower high and drops. So, there's a lot of, this is a case-by-case basis, but as a rule, please make trading decisions. It's Rolls-Royce back in the day, and I'm running out of time here. Rolls-Royce back in the day was losing money precipitously. Right? I'm talking 20 years ago. So what they said, basically what they committed to doing was saying, well, if we're going to lose money, we're going to lose money making the best possible cars we can. Right? So what I'm trying to say to you is, if you're going to go down in a blaze of glory, go down in a blaze of glory trading properly. Right? Do yourself that at least. And I guarantee you'll be pleasantly surprised as to where your equity curve goes. Here you go. Just paste those in the room if you. Okay. So selling at support, buying at resistance. That's right, Dave. Okay, micromanagement. This is reactive trading. Miss Pips, there you go. And I can almost guarantee you that number 6 is probably killing you. Because what's happening is you're trading around your trade plans, and then that's eroding your confidence. And when your trade plans crop up, because they're good trade plans, the best trade plans never look good at entry. Nothing's ever going to look good at entry. So you need some fortitude to be able to take these things. So if you're trading around your bias or around your trade plans, meaning that if you're thinking, I'm going to short the euro today, and that's your trade plan, and you find yourself in 2 longs, what's going on, bro? Okay. Okay, so what's wrong with and Vicky, cut me off if I need to bounce. I don't want to run into somebody else's time. Yeah. The thing is, okay, Miss Pips, there's ways to get around that. So what's wrong with trading a mini lot? 1 mini. Okay, thanks, Vicky. I'll take that 10. 1 mini lot. How much time, let's say you give it a 15 pip stop, so $15. Okay? $15. So let's think about $15. That is 2 Big Mac meals. That is 3 gallons of gas. That's a rotisserie chicken, a can of beans, and a loaf of bread. That is a packet of 4 tubes of tennis balls. What I'm getting at is, say to yourself, right, I'm going to devote $50 or $50 to this cause in 3 trades. And just, I know what you're saying. You've got little paralysis analysis, but honestly, if you can just commit to trading a very low lot size, very low, cents is pips, and just make it about the trades, you'll actually start to enjoy trading and want to pull the trigger. It's just a matter of getting over that initial hump. You can do it. I had this problem trading other people's money. It took me like 3 months just to get my head around it. And then once I started doing it, I actually enjoyed it and it wasn't a problem. Okay, micromanagement. Risking money you can't afford to lose. Yeah, there's just no need to, if you're not ready for it, you can build up to it. There's no need to just, at the end of the day, it's all trading though. So, you see, the thing is, okay, so, and I'll probably wrap it up with this. You know, there's a lot of other things I'd like to talk about here. Maybe we'll make this part 2. We'll make the rest of these part 2 for the next webinar. Give me something to talk about. I think we all have a propensity, at least I did, a propensity to make trading personal. Right? So for me, after a lot of toil, it became a more of a personal pursuit rather than a financial one, even though obviously financially is the end goal, right? But because we invest so much time and effort and sort of intelligence and sleep and monetary investment and really our whole spirit in the thing, it becomes a personal vendetta. And when it doesn't work, it's not about losing the $183. It's about feeling crummy about oneself as a human being because you've invested all of this in trading and it's still not working. And that can affect how you trade your plans because you don't want to open yourself up. And I'm not a psychologist and I don't mean to put you on the couch today. But, you know, opening yourself up to that defeat is, you know, opening yourself up to further disappointment. Unfortunately, that's just a burden you've got to bear. Well, how do they do trading? Open a hedge fund, add a whole bunch of, pile on a bunch of things. If it doesn't work, they open another one. Pile on a bunch of stuff. If that doesn't work, they open another one and wait until they have a big hit and then cash out. That's how they do it. Guys, this thing about smart money is the biggest load of crap hole I've ever heard. Oh, what's the big money doing? Exactly what you and I are. They're no smarter than you and I. There's no such thing, Boyke. I will say this. Yes, it's no different. I got a friend that's an energy trader. I know more than he does, and he works for a massive prop trading group. It's just institutional versus us at home. Anyway, so we'll call it good here, okay? If you want to reach me, david@fxbootcamp.com, @forexdavid on my Twitter. And, you know, we'll add to this and we'll continue it next time. Sound good? Because there's things I want to, you know, there's things that we can talk about here at length. So, I just need to get my A into G, Dave. But yes, it's just a 2-hour investment. but I will. Thanks, guys. I appreciate it. And we'll talk to you guys soon. Vicky and FX Street, all the best. Thanks.